We've been involved in a lot of deals lately where the ARVs are not coming in quite where the borrower, either on a refinance or a flip, quite where the borrower thinks they're going to be. And I want to give some context and stuff to think about for newer investors. As I'm just reading some nationwide real estate data, here are some things you need to consider, because when you buy a flip in particular, you basically have to forecast 6 to 9 to 12 months out. And you can see some of these trends that I'm going to explain to you. You can see these trends coming earlier and kind of extrapolate, and then therefore you need to either be more conservative or just not, do the deal where the market pressure is still causing those purchase prices to be higher. Here's something to consider. Here's just some recent data out of Florida. By the way, you can get all of this data online, the chat GPTs, Grok, whatever. Now they do a good job of just giving you the facts, the high level stuff. You can certainly get deeper details, but here's some trends that you should think about if you're getting pressure to buy and the ARVs are coming in low. So for Miami, Fort Lauderdale, West Palm Beach area, in October of 2024, the average day on market was 65. And in February of this year, it is now 73. For Tampa, in October, it was 50 days, and in February, it was 60 days. Orlando, Kissimmee, and Sanford, October was 55 days, February, 65 days. Now, if you take a second and kind of do that analysis with, we like the Southeast a lot, so do that analysis in the Southeast, you'll see, if you do the same kind of queries that I'm doing, you'll see that those numbers are going up like 10, 15, 20%. With that, what's going to happen to the sale price? The sale price is likely to come down because there's not the pressure. There's more inventory, more buyer choice, and the pressure. And that's only one factor, right? The other factors, insurance costs, mortgage rates, the turmoil in the economy right now. So you as an investor, when you're buying a deal, these are the things you have to look at. You don't just look at purchase price, rehab, ARV, good, I'm profitable, move on. You need to look at these other dynamics, or else 6 to 9 to 12 months, let's say you have to refinance the property, or it's just not selling, or you're not getting the offers where you think you need to be, the deal might have been profitable, but there are other market dynamics that you need to consider. This is one of them. This gives you the trend, and it allows you to be conservative, because if you're being forced to buy a property that's not going to pencil out, let another investor do that and go find a deal that's suitable for your profit margins and your expectations. That's just one piece. If you want to know how I find this, I can just tell you. Just leave it in the comments. Otherwise, go do this before you lock a deal up at a price that's way too high. Have a good Sunday. See ya.